Hey everyone, welcome back to another exclusive podcast from IronFX, where we're dedicated to bringing you the absolute best education to help you take your trading to the next level. I'm your host Desmond, and today we're diving into a topic that keeps investors, traders, and analysts on edge: the US earnings season. What is it? Why does it matter? And how can you prepare for the wild ride it brings? Let's get started. First up, let's define what the US earnings season is all about. Simply put, it's the period when publicly traded companies in the United States release their quarterly financial reports. These reports are like a company's report card showing their revenue, profits, losses, and other key metrics. Investors and analysts pore over these numbers to gauge how a company and the broader economy is performing. Earnings season happens 4 times a year, aligning with the end of each fiscal quarter. January for Q4 results, April for Q1, July for Q2, and October for Q3. The bulk of the action typically unfolds over a few weeks, with major companies like Apple, Microsoft, and Amazon dropping their reports, setting the tone for the market. It's a high-stakes time, packed with surprises, disappointments, and opportunities. Right? So, why does earnings season get everyone's adrenaline pumping? Right. For one, it's a reality check. These reports reveal whether companies are living up to Wall Street's expectations or falling short. A single earnings miss or beat can send a company's stock price soaring or crashing, sometimes by double-digit percentages in a single day. Right. But it's not just about individual stocks. Earnings season can move entire sectors and even the broader market. For example, if tech giants report weak results, it could signal trouble for the Nasdaq or growth stocks. Strong bank earnings, on the other hand, might boost confidence in financials. Beyond stocks, earnings season ripples across asset classes. Bonds can react to signals about interest rates or inflation in company guidance. Currency markets like the US dollar can shift if earnings hint at economic strength or weakness. Even commodities like oil or metals can feel the heat if industrial or energy companies revise their outlooks. The stakes are high because earnings season doesn't just reflect the past, it shapes the future. The companies often provide forward guidance, offering clues about demand, costs, and economic trends. In short, it's a critical window into the health of corporate America and the global economy. Now, let's get practical. How can traders prepare for the volatility and opportunities of earnings season? Here are 3 key steps to stay ahead of the game. First, do your homework. Before earnings season kicks off, review the calendar. Websites like Yahoo Finance or Bloomberg list when companies report. Focus on the heavyweights in your portfolio or sector. Those are the ones likely to move markets. Dive into analyst estimates and whisper numbers, which are the unofficial expectations floating around. Knowing what the market expects can help you anticipate reactions. Second, manage your risk. Earnings reports are unpredictable, and even great companies can tank if they miss estimates by a penny. Consider tightening your stop-loss orders or reducing position sizes before a report. Options traders might use strategies like straddles to capitalize on big moves without picking a direction. Whatever your approach, don't bet the farm on a single earnings call. Finally, stay nimble and informed. Right, earnings season is a news-driven frenzy. Follow real-time updates on platforms like X or financial news outlets to catch breaking developments. Pay attention to conference calls where CEOs drop nuggets about future plans. And don't just focus on the numbers. Guidance and management tone can matter just as much. And there you have it, a crash course on the US earnings season. Right? It's a quarterly whirlwind that reveals the pulse of the economy, shakes up markets, and tests every trader's mettle. By understanding what's at stake and preparing strategically, you can navigate the chaos and maybe even come out ahead. That's all for today's episode. Thanks for tuning in, and in the meantime, do remember to subscribe to our podcast here at IronFX, where we're dedicated to bringing you the very best education to take your trading to the next level. Until then, stay informed and stay tuned.